All right, in Europe, Christine Lagarde, ECB president, has warned that underlying price pressures will remain sticky in the short term and signaled that further interest rate rises from the European Central Bank are very likely, as inflation is a monster that we need to knock on the head. That's her quote. The ECB was not seeking to break the economy with rate increases. She was speaking to Spain's El Correo as she appealed for banks to reschedule debt repayments for households struggling to cope with soaring borrowing costs on variable rate mortgages. And those are mortgages that move up and down as interest rates move, as opposed to fixed rate mortgages. Now, one of Credit Suisse's longest standing shareholders has sold its entire stake in the scandal-hit Swiss bank after losing patience with its strategy amid persistent losses and a client exodus. U.S. investment manager Harris Associates, whose deputy chair and chief investment officer David Herrero was for years among the Swiss bank's most prominent supporters, owning as much as 10% of Credit Suisse stock last year. For more on these headlines, we cross over to London, where we're joined by Arise business analyst Bode Ososimi. Good morning, Bode. Thanks for joining us. What else do we know about this Huawei case involving this possible lawsuit with Nigerian court in London?
Well, good morning and thanks for having me. Indeed, it's a bit of deja vu if proven to be true. And we can't overstate the importance of integrity in leadership of key institutions. It's so pivotal for progress. It's been alleged that the Nigerian Customs Service actually falsified documents to remove Bionica, previously appointed as the lead sponsor with Huawei as technical partner, and is in the progress of handing over leadership to a partnership where the Customs Controller General, Colonel Ahmed Ali, will have a direct personal interest through this company called Trade Modernization Project Limited, said to be a hurriedly formed company late last year. Others in the deal, Bergman Security Consultant, Huawei, of course, as technical partners as well. But Huawei, I believe that they're seeing the project realization risks. And of course, there are going to be new terms and which they find unusual, and they want to exit, but not without a comfortable settlement to cover their upfront costs. Hence, they may be going to court. But let's wait and hear what they're going to be saying. When global players come to bid for major projects, they invest huge sums upfront and expect that global standards of fairness and integrity will be held and will be upheld. And one hopes that this can be resolved amicably out of court before more embarrassing beans are spilt. The Customs Service have some explaining to do to Nigerians, even before we hear the arguments in court. I also understand Bionica is suing in the Nigerian courts, but what we know is that documents show that Bionica initiated the project, alleged to have spent 5.7 billion, and they claim letters were forged to support false claims that led to them being pushed out. So this is a $1.896 billion project, and the gains, we understand, can total revenues of about $176.2 billion over the 20-year concession period. So 3 points very quickly. The potential revenues of $176.2 billion over 20 years is reflective of the opportunities that exist if we get it right with governance. Of course, it just means what we can lose if we continue to play games. The other thing I must mention is that realization of project intentions require very robust, professional and ethical program management. Otherwise, many of these intentions are just not going to be realized. And of course, Huawei, they would see that they've done their due diligence, and if they now see new partners and stakeholders being brought in, it just complicates the risk of not realizing the gains of this project. So, like I said, the customs have some explaining to do, and we expect a reaction from the Nigerian Customs Service.
And to China, why do you think China is going with such a low growth target, 5% for 2023?
Well, as the world becomes more geoeconomically complex, it's probably smarter and safer, more cautious to put out lower goals, not counting your chickens before they are hatched, so to say. But this shift to a more moderate growth, it will impact the economic aspirations of many other nations, especially in Asia. And there are many views. Some say this is a calculated move to beat expectations as analysts expected 5.5%. And of course, there will be consequences. This forecast will weigh on energy and commodity prices. Iron ore, copper futures are already down. Brent crude was down about 0.7% in early trade this morning. There's another view that the COVID experience may have changed a lot of things. There's a deep reset taking place in the Chinese economy from the super growth period of an agrarian economy to a fast modernizing industrial and consumer society, which is more like Western economies. And so they can't be having those 10%, 8% type of growth figures like they used to have in the previous period. So this may be the sign of a mature modern economy, which is now looking more like Western economies and showing that kind of growth. The other view, of course, is that China is not done with all the regulatory crackdowns on some of the high growth sectors, and they're allowing some slack for the crackdowns that, of course, may continue. We know what they are focusing on, these hyper growth sectors, trying to reduce income inequality, they say. But the mood also implies we could see more reluctance to return to Chinese equities. And all this, of course, is going to have an impact on how much growth they're going to get.
And can you quickly take us through what analysts are watching this week after last week's positive showing on Wall Street?
Indeed, last week was good. All three major indices finished strong. On Saturday, we have the U.S. San Francisco Fed President Mary Daly say more rate hikes are likely to cool inflation. But the big event this week is Fed Chair Jerome Powell. He will give his much-awaited biannual testimony to Congress on Capitol Hill tomorrow before the U.S. Senate Banking Committee, and on Wednesday before the House Financial Services Committee. So we'll get economic outlook, inflation, wage pressures, employment. The familiar line that the Fed is not yet done with this fight against inflation. Any hint or mention of the word disinflation will be grabbed by markets looking for any boost they can get on sentiment. As you know, they're entering their blackout period before the Fed decision on March 22nd, where there is a 72% probability of 25 basis points hike. Other central banks, Reserve Bank of Australia, Bank of Canada will also announce their latest policy decisions. Reserve Bank of Australia is expected to hike rates by another 25 basis points, despite last week's surprise softening in latest inflation and growth numbers. The Bank of Japan will also announce a monetary policy decision on Friday. It's Kuroda's last meeting. Will we get a parting shot? I doubt. I think he will just keep short-term interest rates unchanged at minus 0.1%. The big data, of course, is jobs data coming out on Friday. JOLTS, that's the labor turnover survey, and job openings coming out on Wednesday. ADP jobs report also on Wednesday. Let's see whether we get a gain of 215,000 non-farm payrolls like they expect. That's the median estimate for Friday. Of course, if we see a big upside, that could lead to another sell-off with more chatter or rumors of a possible 6% Fed rate.
Rise business analyst Bode Oshosumi. Bode, thanks for taking us through the headlines. Appreciate your insights as always.